All right, good morning, everyone. It is 9:21 in the morning of April the 4th, 2022, and this is my pre-market strategy session. The title of this video is The Last Red April Was in 2012. So it's been 10 years since the last Red April. I don't know. I'm not making any predictions on whether it's going to be red or green. Here on the chart, you can see here this tiny little red. Actually, let's see if I can do that better job of that. This tiny little red thing right here. There's a little red bar right in there, and that was April 1st. So there's been one trading day in April so far. It opened up, went lower, and then almost closed higher, pretty much closed at the same level as it opened. It's a really small candle. It's hard to see on this chart. So just going to kind of leave it there for a little bit. This is the monthly chart. And so here we have April of 2021. It was green. 2020, green. 19, green. 2018, green. Right here, if you can't see it, it has the green mark above it. Green mark above this one. 2017, green. Right here. 2016 is green right here, 2015 is green, 14 is green, 13 is green, and then finally way back here in 2012 we had a red one. So I don't know. I mean, it's just interesting. April is typically, generally, a pretty strong month for the market. There happens to be some rebalancing that occurs after the first quarter of the year. It actually kind of goes that way, I've noticed, since I've been trading, that sort of November through February are really busy parts of the year for trading. Then at the end of the year for November and December, I guess portfolio managers or fund managers or whatever, they're like scrambling for returns in order to beat their benchmarks or whatever's going on. I'm not exactly sure totally. And then in the beginning of the year, in January and February, all the portfolio managers, fund managers, whatever, are positioning themselves for the year. And it seems like March goes by, and March is usually a little bit quiet, and then April comes in, and people sort of make sort of last-minute tweaks to their portfolio to prep themselves through to September, essentially. There's an old saying, sell in May, go away. And May can be a pretty decent month too. So it's just kind of, it seems to be that April is busier than May, and then volume really tends to fall off through the summer and into the late winter again. September, October are usually pretty rough months for the market, and then November and December tend to be on the up and up again. So here we are at April, and what we've got going right now, let me get rid of this tag out of the way here, is it looks like we might possibly just have a dip right here. It's possible that it could come back up after a dip down right there. I can't, I'm not making any predictions here, and it's interesting. There's a lot that's already known by the market. For example, right now, here's the 10-year, 2-year yield, and it has inverted. The pink line is 0, so right now it's the rate on the 10-year is below the rate on the 2-year. Which is, it's weird to me. It's really weird because it's like, the 10 years sort of the flight to safety, but I guess if people are expecting like a long-term depression, they're willing to lock their money away in higher rates, in longer duration. If there's going to be like a long-term sort of downturn in the market, then people are willing to accept a lower rate, for longer term. Because suppose for a moment 2 years pass by and we're still in this, whatever's going on, say, I don't know, sort of downward moving GDP and so forth. And then what are you going to do once the bonds mature at 2 years? You're going to, buy in at the, bottom. I don't know. It's just weird to me, but it's one of the markers of coming hard times on the economy, which will filter into the stock market eventually. But the stock market, can continue to move higher as yields invert. And the stock market usually does, and it's not actually. Usually, it's not until the inversion corrects itself until things come back out. So once things come back out of inversion, that's right in here is usually where you start seeing the stock market really start to take a nosedive. So there's still time, in my opinion, on the stock market to continue to make money. It's just I don't know. I don't everybody says, yeah, this time is different. Well, there are differences between every single sort of downturn or dip or recession or anything that happens. I mean, they all have their own unique principles or their own unique sort of, I don't want to call it experiences. I guess the people who are involved with it have their own unique experiences. I mean, not every one of them is exactly the same. I mean, the duration, the time of the year, the sectors, well, usually the sectors that are affected are usually the same, but they're all not exactly the same. I mean, to say this time is different is true because there's no exact match, but there's some really rather reliable and general sort of occurrences, and that is people go to defensives, gold does well. Pardon me, I need to wet my whistle a little bit there. So yeah, it's the inversion is definitely happening here. I mean, look at this thing on the 1 month. Here, let me switch it over to the 1 month. You can see it really accelerated, really accelerated to the downside there. Could see a little bit of consolidation here, but I imagine after a little bit of consolidation, it's going to go further into inversion, especially if the Fed continues to tighten into these conditions. So this is going to be interesting because the Fed has never tightened into an inverted yield curve before. And if they do so, it'll be the first time they do. So, all right. So what happens, with it's really hard to have a bullish bias, with this, with the inverted 10-year. I mean, it's just, everybody knows. I mean, the 10-year, 2-year inversion precedes a recession, and if the Fed tightens into this, I mean, that's going to be, liquidity is going to dry up real fast. But at the same time, as this 10-year, 2-year yield inverts, it's really quite common to see the stock market run up. So, I'm not really sure what to make of it. I'm not really sure whether, I mean, Hedgeye is bearish, but that doesn't mean that it could take another 3 to 6 months before the SPY rolls over. So in any case, I'm still setting up. I'm still looking for bearish setups, and I'm still staying really tight on risk. Where I would usually be willing to take a larger position, say go 10 contracts on either a put or a call on the SPY or on any given individual stock, whatever. This now I'm doing like 1 or 2 puts or calls on a trade. So the moves have been so large that the small positions I've been taking have been rather profitable. Here, let's see. We just got the open. Let's see what's going on here. So it looks like it's trying. That's the daily. So looks like we're getting a little bit of a sell-off in the morning. Now, usually what that does, it'll do this for 10, 20 minutes or something. It'll find a bottom. It'll find somewhere to, kind of catch some support, like maybe this 450 area or something, somewhere in the previous day's support area. And then I'll start running up. But we'll see. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.